Okay, Bellco is in the business of supplying yellow construction equipment. The company has a 31 May financial year end and is registered for VAT. The yellow construction equipment consisting mainly out of trucks is manufactured by Bellco Limited, a reputable company and a registered VAT vendor situated outside Jeffreys Bay in the Eastern Cape. Bellco manufactures the equipment after an order is placed by Bellco. Wheels on Top Pty Limited, a company is not registered for VAT, transports the goods to Johannesburg. They own a truck specifically custom-made to transport the heavy-duty equipment. It charges a fixed price of 18,000 Rand, regardless of the number of units delivered, for all deliveries made from Jeffreys Bay to Johannesburg. Guys, this question is an excellent question that tests integration. Bellco applies a markup of 25% to the total cost of a unit to determine the selling price. So 100 plus 25 equals 125. VAT rate is 15%. It's applicable on registered VAT vendors. Bellco uses a perpetual inventory system based on the first in, first out method of inventory valuation. It is the policy of the company to make use of allowance for settlement discount accounts as far as possible for both sales and purchase transactions. And then they give us the following transactions. Purchases for the month of May. They give us sales for the month of May. And then they give us a little bit more information. They said they also received some money in advance on the 29th of May. Bellco awards a 2% settlement discount to customers who pay within 15 days of the invoice date. They give us the opening balances as at the 1st of May. Trade receivables, that was nothing. Inventory, they had one Mag 60 truck on hand for 1,025,000. They had two Mag Mini 15 trucks available for 620,000, and there was consumables and stationery. Trade payables as well, and VAT input with a question mark. VAT input. Now, input you should have recognized got a debit balance, eh? As at 1 May, related only to the opening balance of trade payables. So included in that amount was my VAT input balance. So I will divide it by 1.15, multiply it by 15%, and that will be my opening balance on my VAT account for the month. Good. As from 1 May to 31st of May, neither consumables nor stationery were issued for use. So that means at the end of the May, those two balances are still on hand, so that will form part of my consumable stock as at month end. Okay, the first part of the question says, prepare the inventory note to the financial statements of Bellco, and they say the accounting policy note is not required on 31 May. Good. So obviously for the Mag 60s, I need the one Mag, and I've got units and I've got prices, so I'm going to do it in a table format. One Mag 60 for 1,025, two Mag 15s for 620,000. And then we're going to do the purchase transactions. So coming back here, Mag 60, I had an opening balance, one Mag for 1,025,000 in total. So what was my price per unit? That divided by 1 gives me 1,025. My Mag Minis, I had an opening balance of 2 units on hand. The total value of the 2 units was 620,000. So that divided by that gives me a unit price of 310,000 per unit. Good. So we had purchase transactions which took place. On 10 May, Bellco purchased 4 Mag 60 trucks from Bellco with a price of 1,030,000 each, exclusive of VAT. The trucks were delivered to Bellco's premises on 13 May 2018, together with an invoice for the total delivery cost of 18,000, of which payment was still outstanding at year end. Payment for the trucks were made on 18 May 2018. Within 8 days. Now here in this paragraph, they tell us what is the Bellco's credit terms. They have good credit terms, and if payment is made within 10 days of the invoice date, 10, 18, yes, within 10 days, a 3% settlement discount is granted. To accommodate late payers, Bellco also offers a 1.5% discount in the event that the invoice is paid within 20 days of the invoice date. Bellco normally pays within 20 days. So if something has not yet been settled at year end, then we can assume that we will have an allowance for settlement discount based on 1.5% of the VAT exclusive price. Good. So let's do this transaction first. We're going to buy 4 trucks, Mack 40 trucks, 103,000 exclusive of VAT. Those trucks were paid for. They were paid for within 8 days. So therefore, they have received a 3% settlement discount. Over and above that, there was transport cost of 18,000 Rand. And the guys who are doing the transport, wheels on tar, is not registered for VAT, and they charge a fixed price of 18,000. So there's no VAT applicable on the 18,000, and the full amount can be capitalized as part of the cost price of that truck. So we are going to buy 4 of these items at 103,000, and that amount was paid on the 18th of May. Therefore, I can deduct from that amount a 3% settlement discount. And obviously, if you took that amount multiplied by 97% and only showed the net amount there, 100% correct. There was also a delivery cost involved, and the delivery cost involved was 18,000 Rand, and that was still outstanding at year end. Now, it is important that I indicate next to this what is outstanding, what is not outstanding, because the question later on asks me trade and other payable note. So therefore, as we go along, best to define or to identify those items which will be shown as part of the trade and other payables note. Good. Then the question says, on the 17th of May, Bellco purchased 3 Mack 15 mini trucks from Bellco. The invoice amounted to 215,6250. So therefore, in the cost price of that item, I have to take out the VAT. Delivery took place on 23 May 2018. Wheels on Tar has not yet invoiced Bellco for the delivery, but we know that that delivery cost was 18,000 Rand, and that will be still an outstanding item at year end. Whether we receive the invoice or not, we are now very sure what that amount is all about. So we will capitalize the 18,000 as part of the cost price of the truck. Otherwise, it is going to be a misrepresentation of the value of the truck. This delivery cost, obviously, because I haven't received the invoice yet, as well as the full amount due to Bellco, was still outstanding at year end. Now, although we're only going to capitalize the VAT exclusive amount there of the 2156, the full 215,6250 will be outstanding at year end, and that is going to form part of trade and other payables. So therefore, I want to indicate somewhere in my calculation so that I don't forget about that. So my purchase on the 17th of May would be the VAT exclusive amount, 2156 divided by 1.15, 1875. Now, normally, the question tells us that we make use of settlement discounts, and usually we pay within 20 days, so therefore there's a 1.5% settlement discount that we have to take into consideration. So we will have an allowance for settlement discount for creditors at year end of 28,125. And then the delivery cost of 18,000, which is also outstanding at year end. So the total cost of those 3 trucks was 186,4875, and if you work out a unit price, then it is 621,625. Good. Now, sales transactions. Bellco sold 2 Mack 60 trucks. Roadbuster normally pays the account within 15 days after year end. And we grant a 2% settlement discount to customers who pays within 15 days. So the first thing that we have to realize is that 2 trucks were sold, 2 Mack 60s were sold, So the first question asks us the value of closing inventory. So how many trucks would have been on hand at the end of the year? We had 1, we purchased 4, so we had 5 trucks available to sell. We have sold 2 trucks, so there must be 3 trucks left at the end of the year. First in, first out says that one is gone. So this 3 that's left must come out of this batch. So closing inventory of that 3 units will be valued at that price of 1,003,600. So 3 times that gives us a total of 3,010,800. Then we have sold 3 Mag 15 mini trucks to Tarmania. Tarmania normally settles the account within 15 days. So that means that we also have to adjust this calculation. We have sold 3 of these trucks. We had 2, we bought another 3, so we had 5 trucks which was available to sell. We have sold 3, so how many do we have left? 2. First in, first out said that 2 was sold and 1 of those was sold. So at year end, there were still 2 of that batch left on our floor. So 2 trucks at the value of that of those trucks, 6165, will give us our closing inventory. Remember, the first part of the question wants you to write the inventory note. So what is my total trading inventory? That will be my 3,010,800 plus my 1243250, which gives us 4254,050. And then our consumables, if you look at the question here, says that nothing has happened with those 2. So therefore, consumables nor stationery was issued for use, so those 2 are still outstanding at year end. So that would be consumable stock. So the first part of the question, proper heading, Bellco Pty Limited, notes to the financial statements as of 31 May 2018. 2018 Rand. Inventory. The total there that we've calculated, that one plus that one gives us 4254,050, and consumables would have been the stationery and the other one 124,300, and that is the amount that we're going to show there. The B part of the question requires us, or asks from us, to calculate the total cost of goods sold in respect of those 2 sales transactions. Now, basically, we have the basic information on hand. The first sales was 2 items. So we know that that item was sold and one of these items were sold. So for the 20th of May, first item was sold and that cost there was 1,025,000. Then there was another item sold to make up the 2 items sold, and the cost price per unit of the second batch is 1,003,600. So therefore, if I multiply that out and I add it all together, the total cost of sales of the Mag 60 trucks was 2,028,600. We know that for the Mag 15 mini trucks, there were 3 items sold. So first in, first out says those 2 items were sold first, and that's the cost of those items. And then one of this batch must have been sold, and that was the unit price per item, 61,625. So 2 times 310,000, 620,000, 1 times 61,625 gives you so much. If I add it all up, 1,241,625. Total cost of sales will then be the 2,028,600 plus the 1,241,625, which gives us a 3,270,225. Then the question in the C part says, prepare the trade and other receivables note to the financial statements of Bellco for the financial year ended 31 May. Now, these sales transactions that took place, both of them hasn't been settled as yet. So therefore, what we have the cost of sales amount. We've just calculated the cost of sales. And then by adding the profit percentage of 25% to the cost, we are going to have the selling price of those items. All we have to remember is that we also grant a settlement discount should a guy settle his account in time, and that settlement discount is usually equal to 2% settlement discount. So, debtors, the sales value of goods sold, that one that we've just calculated, was 3270225. So 3270225. Then we're going to add a profit margin of 25% to the cost of the goods sold. So the sales value of the goods sold was 4087781 before that, because cost price is before that. So what would the invoice prices have been? I would have added the 15% VAT to the sales figure, and it would have given me a total amount of 4.7 million, which equates to the invoice value of the goods sold. Now, settlement discount was granted in both instances. And how do we calculate the allowance for settlement discount? We take the VAT exclusive value and we multiply that by the settlement discount percentage. So the VAT exclusive value was 4087781 multiplied by 2%, which gave us the allowance for settlement discount of 81,751. Trade and other receivables, trade receivables 4.7 million 948, 47,948. Less allowance for settlement discount 81,756. Now the question goes on and rattle about VAT. So what we have to do is we have to look at what is the complications of VAT. We have our opening balance. We've already spoken about our opening balance. And we said that is only relating to trade payables. So if I have that amount, I divide it by 1.15 and I multiply that by 15%, I have the opening balance of my VAT account. Now for purchases, let's do this one first because we've just spoken about this one. For sales, we have just worked out what is the VAT output, 613,167. So that one we can plot right away. It's VAT output. That was a VAT input figure, so that's a debit balance. VAT output is a credit, so it's going to reduce that value. Good. Now for purchases. Let's have a look for purchases. We have here, when we did our stock, we said there we took out any VAT involved in that amount. Also here, we took out the VAT involved in that amount. So if you look at our purchases amount, what is important to note that with our purchases, that this purchase here was already paid for. Because it was already paid for, it means that the settlement discount was realized, and I had to pay VAT output on the amount of discount that I've received because I've already settled the bill. So therefore, if you want to work out the net impact of the VAT, you could have worked out the VAT on that one and the VAT on that one and subtract the one from the other, or you just could have said 4120 less 123,600. That would have been the VATable amounts. 4120 less 123,600 would have been the VATable amounts. Remember, in purchases, we work with VAT exclusive prices. So if we want to work out the VAT, we have to multiply that by 15%. Then for the second purchase that took place, this 1875, this settlement discount has not yet been realized because we haven't paid that invoice as yet. So that means that that VAT applicable on the discount that we're going to receive has not happened as yet because cash flow hasn't taken place as yet. So the only VAT implication would have been on the 1875. So we're going to multiply 15 or add 15% on the 1875, which is basically the difference between the 2156250 and the 1875. In both instances, the 18,000 is not subject to VAT because that service is being supplied by a non-VAT vendor. So if we go back to this one here, we say good, plus 1,875,000 times 15% will give us the total VAT on the purchases, VAT input. Now, income received in advance. We have to go back to the question to read the whole story about the income received in advance. They tell us here that Bellco received a payment from Bridgman for a MAG 60 truck on 20 May 2018. The client is so eager to receive their truck and consequently they have settled the listed price amount in full, ignoring the settlement discount terms. So I received the full sales value on a truck from this guy. Bellco will only invoice Bridgman on the 4th of June when the truck will be delivered. So no actual sales transaction has taken place, but clearly that was income received in advance. Now that income received in advance was for a MAG 60 truck. We've already established that we still had 3 trucks, and that was the value of the trucks on hand at year end. So basically one of these trucks has already been sold, and she paid the full listed price. So she paid 1,003,600, or whatever it is, 1,003,600 plus VAT, without taking any discounts into consideration. So 1,003,600, that was the cost price of the truck. To get to the selling price of the truck, because that's obviously what she would have paid, I would have added the 25% profit margin to the cost price of 1,003, and this will give us now the sales price of the truck, VAT exclusive. Then we have to add another 15% VAT on the selling price. That's the sales value. So 15% on the sales value will give us 188,175. So the invoice price of that particular truck will be a total of 1,442,675. And that is the amount that this person has settled beforehand. So here, trade and other receivables, we have that one, income received in advance, 1,442,675. That will then become part of our trade and other payables note. That was the last one, trade and other creditors or trade and other payables, payment received in advance, 1,254,500. Now the reason why I've done the income received in advance is because there is a VAT implication, and that was the 15% VAT on the sales value of 1,254,500. So that 188,175 we had to take into consideration when we calculated our total outstanding VAT at year end. So based on the income received in advance of 188,175, which is going to be VAT output, so that will give us then a closing balance, a debit balance on our VAT account of 140,737. 140,737. So to recap, our trade and other receivable notes will be trade receivables of 4.7 million, which will be that amount there. The invoice value of the goods sold, less our settlement discount, which will be the VAT exclusive amount times 2%, 81,756, plus our VAT account's debit balance, VAT control account would have had a debit balance of 140,737, and that will give us then 475,993. The last part of the question wants us to show the trade and other payables note. So if we go back to the trade and other payables, we're going to start obviously here with our purchase transactions. We said, well, that one has been settled at year end, so that doesn't form any part of our trade and other payables at year end. That 18,000 was still outstanding at year end. This full amount of 215,6250 was still outstanding at year end. We had an allowance for settlement discount. That forms part of our statement of financial position. It's an account in our books, so we have to reflect that under trade and other payables. And that 18,000 is also outstanding at year end. So looking at trade and other payables, trade creditors would have been our opening balance as they gave it in the question, 470,500. There it is, 470,500. And then we're going to add to it our outstanding amount as at this purchase transaction, the 21562450. It's trade and other payables, so obviously it will include the VAT. Plus the delivery cost that hasn't been settled at year end, which would have been that 18,000 and that 18,000. So in total, it would have been 36,000. So that gives us a total there of 2662750, and there's our allowance for settlement discount of 28,125. 2662750 less allowance for settlement discount 28,125 will give us net creditors, which is the difference between the two, plus the payment received in advance. Now remember, for that income received in advance, what would our entry been in our books? We would have debited bank with the full amount that we have received, 1,442,675. We would have credited income received in advance with a VAT exclusive amount of 125,450, and the VAT we would have taken to our VAT output account of 188,175. So in our statement of financial position, what amount would be reflected as income received in advance? Only the VAT exclusive amount of 125,450, and that will give us then total trade and other payables of 388,9,125. Guys, this is an excellent question. If you understand this, then you're 100% fine.